Hello everyone. So here I am with the video on the changes between March 2022 and June 2022 attempt. There are some changes in the taxation syllabus for the skills level, though they are not very major changes, but there are some minor changes. So let's have a quick look on what are the changes. Basically, I am making it in a two-part video series. This is the part one of the video where I'll be covering the first 10 chapters of the syllabus as per the BPP kit and update you about the changes between the March attempt and June attempt onwards. Okay, so let's have a quick look. I'll just share the screen. Yes. Now this is the list of the changes between March attempt and then the June onwards attempt as per the revised syllabus. So let's go one by one to each of the changes. I'll take it chapter wise. Then you all can correlate from the changes mentioned here. How I have got this, the changes details. This is I have got it from the ACCA Global website. So you all can log into the ACCA Global website, into students resources, and then finally you'll get your tax syllabus. In the tax syllabus, it's at the end that we have the changes between March and the June attempt. It's the summary of changes. Okay. So yes, I'll just take it one by one. In first chapter, there is no change. Okay, that is, it is this chapter, Introduction to the UK Tax System. There is no change. Let's go to chapter number 2, Computing Taxable Income and Income Tax Liability. Let's have a quick look. Where are the changes? The residential status does not have any change. When we go to the non-savings income, dividend income, the way that you have been doing calculations, it's the same way that you have to do. Just some minor changes have taken place, like your personal allowance that we have studied last as 12,500 has now increased to 12,560. As you can see, 12,570, as you can see here. Okay, so accordingly, all your calculations will increase in the same way. Now, moving ahead. So number 1 point, the PA has increased from 12,500 to 12,570. Tax rates are all as it is. There is no change anywhere in the dividend rates or the normal slab rates. They're as it is. As we move ahead, then the next change is here, which is the transferable PA. Transferable PA is no longer 1250, it is 1260. Based upon, because PA has changed, so transferable PA has also changed. Okay. The rest, the way that you calculate, everything would remain same. Just because it has become 1260, so 20% of it, which is a tax reducer, will earlier was 250, now it's 252 pounds. Okay, so just keep a note of the same. Now let's move ahead. Rest, everything is remaining same. There is no change anywhere. Okay, now I take chapter number 3, employment income. So there is no change here. Yeah, no change in this chapter. Okay, then I take up the taxable and the exempt benefits. There is a change here. Okay, now everything is same. There is no change in the living accommodation rules, but there is a change in the car benefits. I'll tell you what is a change. It's not a very major change. It's just a minor change, which is there. Now, in the company cars, what we have studied earlier was that the percentage that's applied to electric motor cars with zero CO2 emissions. You have studied that it was 0%. Now it has changed to 1%. That's the only change. And because it has increased by 1%, so all the further rates have also increased by 1%. Like when the CO2 emission is between now 1 to 50 grams per kilometer. So the hybrid electric cars, which are having the CO2 emissions, they are based upon the miles. The CO2 the percentage has also changed. Let's see what is the percentage. So if the distance traveled is 130 miles or more, the percentage is 1%. If it is between 70 to 129 miles, it is 4%. 40 to 69 miles, 7%. 30 to 39 miles, 11%. Less than 30 miles, 13%. Okay. Now for petrol cars with CO2 emission more than 55 grams, again it is also increased by 1%. So 51 to 54 grams, it is 14% now, and 55 grams, it is 15%. Post is how we do normal calculations. You're going to do in the same way, that is in the multiples of 5. Okay. And for the cars that are not meeting the RD2 standard, the diesel cars, it is going to be more than 4%. But the upper limit is not going to be beyond 37%. Just the same way as I studied earlier. That's one of the changes, and rest everything remains same. And there is one more change in this chapter. Let me tell you that also. So the company vans, earlier we have not studied anything like this. So let me just tell you this. Vans producing zero CO2 emissions will have a zero benefit charge. This line was not there in the earlier, the March 2022 syllabus area. Now this line has been included. Earlier it was excluded, now it is included, which is van which is producing zero CO2 emission will have a zero benefit charge. The benefit charge will only arise when it is the CO2 emission is more than zero, that is 1 onwards. Okay. And the benefit is 3,500 a year. For fuel, it is 669. Rest all remains same. One more change is there, which is, though it will be given to you in your tax rates and allowances chart, which is your official rate of interest. Earlier it was 2.25%. Now it is, this year onwards, it is 2%. Okay, so just take a note, and this would be mentioned to you in your taxes rates chart also. Rest, nothing has changed. The benefits, exam benefits, pay details, everything remains same. Okay, now after the employment income, we are the taxable benefits. Now we are in pensions. There is no change in the pensions. It is just the same, just that the lifetime limits have changed. The lifetime allowances amount, I'll just show you. The lifetime allowance limits have changed. Rest everything is same. And though it will be also mentioned to you in tax rates and allowances chart, but just take a note of the same. So now the lifetime allowance is 10,73,100. That's the recent ones. That would be given to you in tax rates and allowances chart also. Just take a note of it. Okay. No other change in this chapter. Moving to property income. Again, property income also does not have any change. It's the same what you have studied. There is no change over here. Okay. So this chapter is same as to what you have studied. There is no change in this chapter. Moving next, then we have the trading income. In this computed trading income also, there is no change. It is exactly the same. Now we see the capital allowances. Yes, capital allowances chapter has changed. There is a change, though very small change, and this change is only in respect of companies. Okay, so first I will just tell you that change which is in respect of individuals, okay, or the sole proprietors. What is the change? That guys, we have been doing the annual investment allowance as equal to 1 million, right? Pound 1 million that we have studied for the last attempt. Now, with effect from 1st January 2022, this amount has got reduced to 2 lakhs only. It's not 1 million, which is equal to 10 lakhs. Now it is reduced to 0.2 millions only. Now, when you're giving your exam, you don't have to apportion it between the period till December 21 and then January 22 to March 22, like that period onwards. You don't have to do it, because the examination team has given clear instructions that for the exams, June attempt or September attempt, December attempt, and March attempt. These four attempts, again I'm repeating, June 22, September 22, December 22, and March 23, they don't have to take to a 0.2 million anywhere in their questions. For you, AIA for the full year is 1 million, which is 10 lakhs. Okay, your AIA is going to be 10 lakhs only. It is not going to be changed. Okay, you don't have to do any pro rata calculations. You have to take for the full year as 1 million only. Okay, now this was one part. This is applicable to individuals. Now the second part that I'm taking is only and only available to the companies. It's a new allowance which is introduced, which is only available to the companies. It is not available to sole proprietors or the individuals. Now let me explain you here. I'll also do one question to make you understand this new allowance. Okay, it is called as enhanced capital allowances for companies. Now, with effect from 1st April 21, companies can benefit from this enhanced capital allowances on the purchase of new plant and machinery. Important. It is only applicable to companies, or it is only available to companies. It is not available to sole proprietors or the partners. Number two, it is only available on the purchase of new plant and machinery. So it's like your first year allowance. Okay, so it's only going to be available in the first year of purchase. Number three, it is for the purchase of plant and machinery and not cars or any other thing. So that's important over here. Okay, it's only available for them. I hope now we are clear that if there's a purchase of second-hand machinery, then it is not available. Okay, so let's see. Now let's read it. It is not available to sole traders or partnerships. It is not. It is only available for the purchase of new plant and machinery, not second hand, and it is not available on cars. I hope we are absolutely clear with this. The enhanced capital allowances. Now, what is enhanced capital allowance? Depends. Your plant and machinery belongs to which pool, if it is to a main pool or to a special pool. If the plant and machinery belongs to main pool, then you will get 130% first year allowance. Like for cars, we get 100% first year allowance. For plant and machinery belonging to main pool, we get 130% as a first year allowance. And in case if it belongs to special rate pool, then you will get 50% of the plant and machinery amount as a first year allowance. Now, a question might come to your mind, that is, ma'am, that if we have AIA and and FYA, this first year allowance is also applicable, then which one should we claim first? The rule remains same. As you know, AIA should be first used against the special rate pool, then against the main pool. So you're going to do the same way. You are going to use 1 million AIA against the special rate pool, and only then whatever is remaining, if any balance in special rate pool is remaining for that new plant and machinery, only then you will claim this enhanced capital allowance. Otherwise, you're not going to claim. So this FIA claim can only be made after AIA has been used. Okay, so let's see this in an example and understand it. Everyone, please look here. So I'm taking this illustration too to make you understand it. Now we have a data given. JAPC Limited purchased main pool machinery for 3 lakhs and special rate pool plant for 14 lakhs in the year ended 31st March. We know that since it is used for main pool and special rate pool both, and it's a new machinery because it has been purchased, and since it is not written that it's a second-hand purchase, we'll assume it to be a new purchase. Now, you know that first the AIA is used against the special rate pool. So special rate pool is here 14 lakhs. Okay. So when I use AIA of 10 lakhs here, so what I will do for a special rate pool, Give me a moment, please. I'll just explain you here. So let's look here. If my special rate pool is 14 lakhs and I will take 10 lakhs of the special rate pool against AIA allowance, because AIA is 10 lakhs, then how much is remaining? 14 lakhs less 10 lakhs. Why I've reduced 10 lakhs? Again, I'm repeating, because of the basic rule that AIA will be first used against the special rate pool. Okay, so my special rate pool is 14 lakhs. Out of this 10 lakhs, I've adjusted against AIA. So now what is remaining is 4 lakhs. Now I will use first year allowance against this 4 lakhs. Since it's a new purchase, and in case of a special rate pool, this enhanced first year enhanced allowance will only be available for 50% of the asset value remaining. Now out of 14, 10 lakh has already been claimed against AIA. Now how much is remaining? 4 lakhs. Out of this 4 lakhs, now please take 50% as the enhanced capital allowance. 4 lakh, 50% is 2 lakh. So balance 2 lakh will be transferred to special rate pool, and then the normal calculations of WD and all will follow. Okay, let's see for main pool. For main pool, the allowance available is 130%. So if the main pool value is 3 lakhs, 130% of it, when you calculate, we get 3,90,000. So 3,90,000 will be transferred to allowance, and of course this asset is no longer there now, since you have already got more than 100% as the allowance. Okay, so now here when you're writing your asset value, you will not write 3 lakhs, you will write 3,90,000 only. Reason being, if I like 3 lakh and if I reduce 3,90,000 from it, it will give rise to a negative figure, which eventually means loss, but it's not allowed in the capital allowance working. So we additions only, we will increase it by 30% and we will show at the 130% value, just so that when I reduce FIA from it, I get 0, only for that calculation purposes. Okay, so now how much allowances we have got total from the main pool? We have got 3,90,000, because allowance was 130% of the value. So 3 lakh into 130% is 3,90,000. Second, you AIA of 10 lakhs, and then 2 lakhs, that 50% FIA. Total 15,90,000 is the capital allowances that we have got from this. I hope you are clear absolutely on this new inclusion. Now, there is no other change in capital allowances apart from this. And remember, this new change is only for companies. It's not available for individuals, sole proprietors, or partnerships. Okay, now when I see the next chapter, which is assessable trading income, there is no change in it. The opening year rules, that whatever you started, it's the same. Trading losses, again, no change, just that an extension of the losses is there. That what does it mean? If you remember, guys, in trading losses, in the case of your opening year rules, what we do, we can carry back the loss up to the preceding 3 years, and that we adjust on the basis of FIFO, right? The same thing is carried forward for this year also. So the same treatment you will give to the losses in this year as well. So I've just covered first 10 chapters for the amendments. I hope it is absolutely crystal clear, and I'm soon going to post the second video also. Thank you so much. Bye-bye.